Hello everyone and welcome to my channel. Today we are going to talk about, in my opinion, the most important skill as a beginner in the Forex, or even if you are trading crypto or trading stocks, it doesn't really matter. In the trading industry, the most important skill you need to have in the beginning is knowing the market structure, or identifying the market structure. Why it's so important? Because identifying the market structure will be able to give you the edge on the market. Means that if the trend is bearish, it's a downtrend, you want to sell, of course, right? Especially in the beginning of your career, you need always to trade with the trend. As they say, that the trend is your friend. If you trade against the trend, you don't have an edge in the market. You always need to have an edge. The people who moves the market is the banks and the hedge funds. So these are the smart money. And here in this channel, we are gonna use and talk only about the smart money concept. Why the smart money concept? In my experience, I try to learn so many concepts in the trading. Like it's like trading strategies. And the most successful, in my opinion and in my experience, is the smart money concept. Why? Because the smart money concept, you will be able to identify where the banks and the hedge funds is going to sell or buy. That's the point. That's the whole point of the smart money concept. Smart money means the big money. Where are the big money is going to sell? Where are the big money is going to buy? That's the whole point. So when you trade with the banks and the hedge funds and the institutional market, you have an edge and you always have a huge probability and a big probability of winning trade. So in the beginning of your day, when you open the chart, when you see a trend in front of you, you see the chart in front of you. Let's assume that you know already this is a bearish trend or a bullish trend. It doesn't really matter. In today, we're going to give example in the bearish trend, but you can apply the same in the bullish trend. So what we need to identify in the beginning, once you open the chart, you need to identify where what we call it the liquidity or the buy side liquidity or inducement whatsoever. What is the liquidity or the buy side liquidity or inducement? It's the pullback. You need to identify where is the first pullback. So let's assume that we know that this is the highest point right here, and you need to identify where is the pullback. Once you look at the chart here in this point, so this part here is doesn't wasn't really existing, right? So you saw this in front of you. So once you see that the price sweep or close above this price here, this area here, which is we call it here the liquidity, once you see this, now you identify the low. So how you identify the lowest point or the lower low? The lower low is confirmed once the price after that point closed or sweep that point here. It doesn't really matter if the candle closed or just the wick swept this high. Once you see the price came above this area here, now you identify immediately, you identify the lower low. So what is next? After identifying the lower low, you need to identify the lower low, you need to identify the lower high. So how you can identify the lower high? Now the criteria of the lower high, that after the price closed or sweep the liquidity, the price need to close under the lowest point, below the lowest point, which is we call it here BOSS, which is a shortcut for break market structure. So in this here, there is a condition that the price, the candle need to fully close. So for example, let's assume it's 1 hour or 4 hour or daily. It doesn't matter really, guys. This concept we are talking here, identifying the market structure and the lows and the highs of the structure, doesn't really apply on in time frame, and it doesn't apply in another time frame. Regardless it's 1 minute or 4 hour or daily or monthly, it doesn't really matter. So let's assume that this is a 4 hour chart. So here, identifying the lower high, the price need to close fully. The candle need to close fully. So if it's a 4 hour chart, the 4 hour candle need to close. So once the 4 hour or 1 hour candle closed, now you identify the lower high. Again, I will repeat this point. So the first thing you need to do is identifying the liquidity. Why we need to identify the liquidity? Because we need to identify the lower low. What is the liquidity? Liquidity is the first available pullback. You can ask, for example, this is as well liquidity? Yes, this is as well liquidity. Yeah, but at this point, it doesn't really matter for you because you need the first pullback. You need the first pullback to start to take decision, because when it's a bearish trend, you want to take decision only to sell, because when you are in the beginning of your career, you need to always to be with the trend. As they say, the trend is your friend. When you trade with the trend, you have a higher probability of succeeding in that trade. That's the whole point. When you try to trade against the trend, you don't have an edge in the market. And that's why today, guys, I'm talking to you about this concept, identifying the market structure. Because once you identify the market structure, you can take decision to sell with the trend. Selling with the trend means you are selling with the banks, with the hedge funds, with the big money, with the smart money. And here in this channel, we are only going to discuss the smart money concept. Why the smart money concept? Because the smart money concept, in my experience, which is I try to learn so many, that the trend line, we try to train the support and resistance, harmonics, so many stuff, guys, so many stuff I tried to learn. And the best I have seen and bring for me results, and I see people made results, is the smart money concept for several reasons, with the most important of them, that the win rate is high and the return of investment is high. The RR is high. All right, so let's go back to the point. So first thing, you need to identify where's the liquidity. Once you see the price close or sweep above the liquidity, now you identify the lower low. How to identify the lower high? After taking the liquidity, the price need to close fully. The candle need to close fully. If it's 1 hour candle, if it's 5 minute candle, need to close fully. So now you identified the lower high, right? Next, what happened here? Here, where is the inducement? The inducement is the first available pullback. So in this scenario, this is the first available pullback, which is, we call it liquidity, buy side liquidity, inducement, whatever, right? So in this case, the price closed or swept the liquidity. So what we identified at this moment, we identified the lower low. How to identify the lower high? The price needs to close fully under the lower low. So we identified in this case the lower high. And then what we need to see? Again, we need to see where is the liquidity, right? So this is the liquidity. So the price went up and closed or swept the liquidity. So now we identified what? We identified the lower low. Sorry. So this is the lower low. Where is the lower high? Okay, we need the price to close under the lower low, which is, we call it break market structure. So let's assume this is what you saw in the beginning once you open the chart and you want to trade right now, right? So you want to trade right now, the first thing you need to identify, you ask yourself, where is the liquidity? The first available pullback. Great. So what I need to do, it's a bearish trend. So I need to sell. When I need to sell, I need only to take decision to sell after taking the liquidity. So which one is the liquidity? This liquidity, this liquidity. So you need to take decision to sell either above the first liquidity or the second liquidity. We're gonna call this liquidity, right? So you need to take the decision to sell above this area here or above this area here. Anything above this area or above this area, the most important is to be lower than the last lower high. So let's assume, and then you wait, you waited, and the price came here and then started to change character like this. And then, so this is what you need to see. It's either the price comes to this point, the price can happen that it does like this. It does like this. So depends on the scenario. in front of you, the most important, we'll talk about the entry and when you can enter and how you can identify the good entry in the other videos. But for now, I just want you to understand that if you will take the decision to sell, the decision need to be after taking out the liquidity. So you can trade this, you can sell the market after the liquidity till the next break of market structure. Let's remove this for now. So this is what happened. You started to wait, the price came here, and then from here in the lower time frame, the market started to change character, to change the direction. So for example, here, for example, if it's a 4 hour, let's assume that in the 15 minute, the market started to take the first pullback. When the markets take the first pullback here in this internal correction, you once it comes back, you can sell. So here, let's assume this is our order block. Now the order blocks and another of like too many other concepts we're gonna discuss in this channel in the future. Don't worry guys, I am do my best to make trading a lot easier for you. But for now, I want you just to be able to identify the lower low and the lower high, and based on this, you can take decision to sell or to buy after taking the liquidity or the inducement. So for me, in that point, I will decide to sell with the trend from that point to the next break of market structure. Regardless, guys, it's gonna sweep or gonna close. It's not really my problem anymore. My problem or my thing is, my target is the market, to trade the market after the inducement, to sell when I see this pullback, small pullback and coming back. My thing is to sell from here to the next break of market structure. So that's in general identifying the market structure. Again, one more time. The first thing what you need to do when you open the time frame that you like to trade, let's assume it's 4 hour or 15 minute, you need to identify where is the first available liquidity. So the liquidity level or the inducement. So this is the first liquidity. The price came to here, to this point. There is an order block here. So the price tapped into the order block here or here. It doesn't really matter which order block the market will choose. So once the price come to this point here, you need to be alerted. You need to be ready to sell. You don't sell right away. You need to see that change of character in the lower time frame and the price pull again to that area. Once you see this here, you can take decision, which is a high probability sell. And then you can put your stop loss where you want to put your stop loss. In my opinion, you put the stop loss above the high before the change of character. So the stop loss will be somewhere here. So I will put the take profit in the next break of market structure. It's that easy, guys. It's very simple. Try as much as you can to make the trading simple by waiting till the price take the inducement and then take decision to sell. Now I'm going to take you to the real chart to see an example. So this is, for example, Euro USD in the 4 hour chart, and we want to identify where is the low and where is the high, right? So let's assume, as we said in the drawing, that this is the highest point here, right? Okay, this is the highest point. So the first thing I need to do, I need to see where is the first pullback. So in this scenario here, this was a pullback, right? But the market did not reach this point. Market did not reach this point. So the market, what happened? The market continued. Here, where is the pullback? Here, this is a pullback. This is the first pullback available. No, sorry. Here, in this wave, the first available pullback is here. How do you know it's a pullback, guys? The pullback is when you see that candle took the previous candle. In this scenario here, you can see that the price took this candle here. Once you see that the price sweep the previous candle, that means that that candle that the sweep the previous candle is a pullback. This is liquidity. So this is how you can identify the pullback. So the candle needs to sweep the candle before, so you can call this a pullback. So here we can see that the price took that liquidity, right? And even took the second liquidity here, right? I hope it's clear for you guys. I'm trying my best just to make it clear for you, right? So once that happened, once we identified the liquidity, so now we identified what? The lower low. Where is the lower high? Once the price close above the below, sorry, the lower low. So this is going to be our boss. So once that happened and closed fully in the same time frame, 4-hour time frame, now we identified our lower high. It's that simple. It's that simple. So if we want to, sorry guys, if we want to trade, we need to trade only after taking the liquidity, right? So we can take decision to sell here. We'll talk about the entry, how you can decide to which exactly, where exactly you need to trade or you need to take the decision to sell. This will be later on. For now, I'm just trying to focus for you guys to be able to identify the low and the high. So what happened next? After the boss, where is the liquidity? Here, for example, there is no liquidity. This small bar, this small candle here is inside candle because the high and the low of this candle. So this is not liquidity. It didn't take out, didn't sweep the candle before, right? Okay, so the market continued in this arm here, in this leg here. Where is liquidity? The first liquidity that we see is here. This is liquidity, right? This is the first liquidity. Where else there is liquidity? This is liquidity. So anything, see how that is accurate. So anything below the lower high, any pullback below the lower high is liquidity. Ah, sorry guys, even this is not liquidity because this is inside of that candle. This is not liquidity, guys. So because this candle here, the high and the low of this candle, so it's protected. The high and the low of the candle is protected. So you cannot really identify this candle as a pullback because it took this candle, because the whole entire area here is inside bar. This is all internal structure of that candle. So it's not really calculated as pullback. If you guys want me to make video about the pullback in details and showing you a lot more examples so you can understand exactly what is the pullback, please mention to me in the comment. I will be happy to do this. So once now here we identified the first liquidity, so this is the lower low. All right. So where is the lower high? Lower high, once we see that the price closed below the lowest point. So this is boss break of market structure to the downside. So once this happened, now we identified what? We identified the lower high. Let's continue. After this, where we can find pullback liquidity? Where is our next liquidity? So after this, we have this liquidity here, but the price didn't reach, right? So the price tried to reach that level but couldn't, and then continue again, right? So we need to see where the price took the previous liquidity. Here it is. So the price here took the liquidity, right? So when the price took the liquidity, now we identified the lower low. I don't know why it's taking both of them together. So and then we, after that, liquidity was taking over. Now we identified the lower low. After that point, the price took the liquidity, right? So after taking the liquidity, now we need to see what? We need to see the price close. So here it's something. So here, now you can see that the candle didn't close. So it's not really calculated as a break, or not really considered as a break of market structure until you see the candle closed. So where the candle closed here. So still you can keep the bosses here knowing that the next candle closed below it. So anyway, the break of market structure happened here. Technically happened here, but the boss is really here, right? After this. So this is our lower high. I hope guys you can understand what I'm saying. Just I'm trying to make it really very simple for you guys. So if I want to trade now, I need to trade after the market take the liquidity. Where is the next liquidity? The next liquidity after the boss in this area here is this. See how this market react. See. So this is our liquidity. See the price sweep the liquidity. So the price here sweep liquidity, so means this is our lower low. So the price sweep liquidity, and then what happened? Another boss. See the candle closed below it. So this is our new boss. After the boss, where is our liquidity? In this arm here, you can see that there is no liquidity, right? So what happened? The price here made another lower low. It's not really obvious here, but the price here swept this low and made another low. I don't know if it's obvious for you guys, but the price swept it. I think this is a lot easier to see. So in this case, what you do, in this case, this will be the lowest point. Here will be the lowest point, because always you need to see where is the inducement after the lowest point. So the lowest point is here, and where is the inducement? Inducement become here in this leg. I'm talking about this leg, right? Because this is the lowest point here, and you look. Okay, some people will think this is the liquidity. No, this is not the liquidity, because this is the same candle. The liquidity needs to be before the lowest point, before the lowest point. So in this here, this is the lowest. This is the first pullback, right? So this is the liquidity, because this candle here, you can see it's very obvious that it took this candle high and this candle high. So this is the first pullback, and this is the highest point. This is the lower high. This is the highest point. You would say, okay, but the price even sweep this high. Yes, the price can do this. It's okay as long as the candle did not close above the high. So here will be 4H, the 4H high. So this is the highest point. In order for us to decide or to determine that the trend change direction, the candle of the same time frame need to close above this. If it sweep it, it means it's sweeping the liquidity. See here, they sweep the liquidity, the highest point of liquidity. And this is usually happen, guys, when the price really want to move aggressively again to the downside. Because the higher they go, the more aggressive it will be the next coming boss. So here what happened again, this is the lowest point, this is the liquidity, and this is the highest point. The price can decide to go down from this OB for our OB, or can choose to sweep it, which is why they do this. They do this because there is a lot of stop losses here. That's why they did this movement here. So once you see the sweeping, you can, the sweep need to be in the 4-hour time frame, guys. So you can take decision to sell here like this, and you put the stop loss above it, and the take profit the next break of structure, which the price need to close below here. This is what you should have done if you open the market and that the scenario was you was seen, you saw. So for example here you would say, okay, but if I sold here I will get stop loss. Yes, it can happen, and this is part of the game. So once if you get stop loss here, if you stop loss got hit here, you can sell here in this area, and you can do this 7 RR, and if you do the entry in the 15-minute, it will be a lot higher RR. Minimum it will be double RR. So now, excuse me guys, so now what you need to do, for example, next coming week, what I need to do, I need to sell only after the break of structure. After the break structure, I need to find where is the next available liquidity. For now, this is the first liquidity. It might change, guys, by the way, the next week. Something can happen here, and the price will make another pullback like this, and then do the break structure. And in this case, this will be our liquidity, and I can decide to sell here or here above here or whatever, because the market keeps changing, guys. You need to understand that the market keeps changing. When you want to trade, you need to follow the market and see what's really happening. Where is your first liquidity? Where is the first available order block? Which is, we will talk about the order block later in other videos. So in this order block, you can take the risk to buy or sell. I hope everything was clear. Please guys, subscribe and like the video, and please mention in the comments if you want me to do more videos about the market structure, which is I have intention to do. But if there is a specific point you want me to clarify for you or make video for you, make more focus on that point, either it's a market structure, order block, pullback, and other topics, I will be talking in the future. Thank you.